Malaysia's housing market in 2025 is navigating a challenging landscape, shaped by rising property prices, stagnant wage growth, and shifting preferences among urban dwellers. The affordability gap has widened, making homeownership increasingly elusive for many, particularly first-time buyers. This has intensified the rent versus buy debate, with a growing number of individuals opting for renting as a more viable solution in urban centers. The evolving market dynamics reveal several key trends. First, urban areas like Kuala Lumpur and Selangor are witnessing a surge in rental demand. This is driven by young professionals and families seeking flexibility and proximity to work hubs, as well as the high upfront costs associated with buying a home. Second, initiatives such as the Housing Credit Guarantee Scheme, or HCGS, and tax relief for first-time buyers aim to alleviate some of the financial burdens. However, these measures may not fully bridge the affordability gap, especially in high-demand regions. Third, rising rental yields are attracting investors to the rental market. This trend is further fueled by the influx of international students and expatriates, contributing to a competitive rental landscape. Fourth, developers are increasingly focusing on eco-friendly housing solutions and integrated communities to appeal to environmentally conscious buyers and renters. This shift reflects a broader trend towards sustainable urban living. And finally, inflation and high living costs continue to strain household budgets, influencing decisions to delay homeownership. For many, renting offers a practical alternative that aligns with their financial realities. In this evolving market, the decision to rent or buy hinges on individual circumstances, including financial stability, lifestyle preferences, and long-term goals. The landscape is dynamic, and staying informed about market trends is crucial for making well-informed choices. Next, for investors, let's talk about some key areas for investment. Klang Valley, for instance, is still a real hotspot for real estate, thanks to advancements in the industrial, retail, and hospitality sectors. High-tech industrial parks and data centers are popping up, which really lines up with Malaysia's new Industrial Master Plan 2030. And honestly, retail and hospitality are also seeing a boost, mostly because of a vibrant tourism industry. Now, let's touch on some emerging trends. First up, sustainability. Eco-friendly housing and green-certified developments are definitely becoming more popular, especially among buyers and renters who care about the environment. Next, integrated communities are on the rise. These are mixed-use developments that combine residential, commercial, and recreational spaces, which really cater to modern urban lifestyles. Also, short-term rentals like those on Airbnb are still thriving, particularly in tourist-heavy areas, since they offer higher returns compared to traditional leases. And finally, infrastructure-driven growth is a big deal. Mega projects like the East Coast Rail Link and the RTS Link are not just enhancing connectivity, they're also driving up property values in the areas around them. For homeowners looking to buy properties for own stay in Malaysia, the landscape is dynamic, and staying informed about market trends is crucial for making well-informed choices. For investors, by focusing on key areas with upcoming infrastructure and emerging trends, investors can really position themselves to capitalize on Malaysia's dynamic property market.